Next, may I also invite Mr. David Gerald, the founder, president, and CEO of SIAS, to deliver the welcome remark too.
Good morning, ladies and gentlemen. Mr. Rapi, Secretary General of SEC, Mr. Virasak, expert on corporate governance and social responsibility, SEC, Dr. Bandit, President and CEO, Thai IOD, Mrs. Kun Sininap, and Mr. Vinit, Ms. Nantika, a warm welcome to all of you. And thank you for your support. We are indeed grateful to SEC and SET for calling on us to collaborate to organize this inaugural corporate governance conference. We have done this for 9 years in Singapore, and before I deliver my speech, I can't resist telling you who we are. We are an association started off as an association for small investors in 1999, quite accidentally, when Malaysia seized the shares of 172,000 Singaporeans and asked us to pay 52 cents per dollar. I was then a practicing barrister, and I couldn't resist helping the stranded mums and pups and small investors. We, within 9 months, by not going to court, purely by putting pressure on the Malaysian government through the media and in the boardroom, we managed to settle it, and we got back our shares. And since then, I did not return to legal practice, but I decided to promote corporate governance practices, investor education, investor rights, and resolution of disputes between company boards and shareholders in the boardroom and not the courtroom. And every year we do a corporate governance week to remind the corporate leaders and investors that they need to update themselves. They need to keep abreast with developments in corporate governance practices globally. We've been very fortunate to have experts coming from United Kingdom, United States, Hong Kong, and Germany. We have had from Norway. We bring them all to Singapore, and we exchange views and receive their expert views, and we update ourselves. So I'm very grateful to SEC, Mr. Rapi and IOD and SET for joining us, calling on us to work with them to share our experiences, and we are very glad to be here this morning. So in the traditional Chinese, in Thai style, I say Sawadee-ka. Thank you. Thank you for inviting us, and we are always very happy to collaborate and share our experiences. At SIAS, corporate governance is one of the key pillars in our vision for building an empowered and enlightened investing community. It is with the investors in mind that SIAS continues to promote good corporate governance practices and standards through various initiatives. Together with the boards, senior managers, professional institutions, and the regulators, more importantly, over the last 19 years, we have established a good collaborative environment of in the boardroom and not the courtroom to achieve this objective. This has resulted in establishing investor relations peace in Singapore that has helped develop our capital markets. For the market, high standards of corporate governance facilitates investment and growth through transparency, thus creating confidence in the market. For the company, pursuing high corporate governance standards facilitates capital raising and reduces the cost of capital. For the investors, they enjoy safety, higher valuations, and better liquidity of the shares of the companies they are invested in. Therefore, it is with this in mind that SIAS continues to push for greater standards in corporate governance practices. Building trust The theme for the conference today is Building Trust in a Transforming Economy. It is important for companies to maintain that trust as investors track your performance and returns closely. To ensure that companies continue to keep the trust of shareholders and stakeholders, it is imperative that good governance practices and internal controls are put in place as part of the culture of the organization. How then can boards and senior managers ensure that the organization is building trust with the correct corporate values and culture? Today, we are all too familiar with the corporate scandals of Lehman Brothers, Volkswagen and Enron, and many more. Here is where I would like to highlight the role of internal auditor. The Singapore Institute of Internal Auditors defined internal audit as an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. The Institute then goes on to state that internal audit is a cornerstone of good corporate governance in organizations, and it plays an important role in providing the board of directors, audit committee, chief executive officer, senior executive, and stakeholders with an independent view on whether an organization has an effective risk and control environment, while acting as a catalyst for a strong risk and compliance culture. So we talk about culture, and in my view, the key word in that last sentence is actually culture. Although the Institute was referring to risk and compliance, we can all appreciate that the overall organizational culture is of crucial importance in determining success or failure. And it all starts with the tone from the top. How then should companies go about building trust and fostering the right culture? Like everything else associated with good governance, it starts at the top with the board. The importance of having the right culture is recognized and enshrined in the introduction of Thailand's Corporate Governance Code, which states that the code is developed as a practice, principles for the board of directors as the leader and governing body of a listed company. A culture which consistently places ethical considerations and client interests at the center of business decisions helps protect employees as well as investors and preserves the integrity of the markets. Conversely, significant cultural failures can impose substantial harm on organizations, including fines, penalties, and loss of reputation and public confidence. And it all starts with the board. It would not be too far off the mark to say that internal audit's primary task is to act as the eyes and ears of the board and to tell it like it really is, without fear or favor, so as to ensure the company stays on the right path. By extension, and bearing in mind that internal auditors' primary accountability is to the board, which in turn is responsible for cultivating the right culture, this means that internal auditors should constantly remind themselves of a need to ensure the culture is strong, ethical, and geared towards establishing trust with stakeholders from inside and outside their organizations. Apart from regularly assessing and analyzing an organization's operational and financial framework, internal auditors should also do the same for its culture, values, and ethical practices with a view of providing feedback to the board and management. By doing so, board and management would be apprised on the health of the culture and the early warnings would enable them to quickly address the potential risks which might lie ahead. In other words, if culture is a key contributor to corporate performance, both positive and negative, it is important for auditors to constantly bear in mind the need to nurture the right culture, to incorporate considerations of culture in every audit project that is undertaken, and perhaps even to figure out how to periodically perform a corporate culture audit. The problem, of course, is that culture is intangible, complex, and therefore challenging to measure and quantify, let alone audit. So it's not surprising to know that auditing culture has been an area viewed with hesitation by the profession. Culture can be so subjective that it can take auditors who are process-oriented and seek objective measures out of their comfort zone. However, just because a task is difficult, it doesn't mean it shouldn't be done. There is growing awareness within the internal audit world of the importance of auditing culture. The United Kingdom Chartered Institute of Internal Auditors, CIA, recently undertook a survey of heads of the internal audit across all sectors to understand the extent to which the profession is involved in auditing culture. The results showed that internal audit functions are taking responsibility for auditing culture, or have at least taken notice of the expectation for them to do so. Of the 220 responses, 55% of internal audit functions are attempting to audit culture in one way or another. In its accompanying guidance note, the CIA stated boards and senior management need to understand whether the culture they want for the organization is actually the one that exists in practice. Over in the United States, the Institute of Internal Auditors, IIA, in 2016, published a new white paper encouraging its members to take a closer look at the culture that can impact its business. The paper makes the case that too many high-profile compliance failures in recent history can be tied to cultures that encouraged, allowed, or looked past bad and illegal behavior. The IIA recommends that culture be added to the internal audit workload because auditing culture helps the organization manage it. The message is therefore clear. The internal audit function should think seriously about auditing corporate culture into its daily tasks. I leave it to the professionals to do the research on how this can be accomplished, as there is plenty of fresh and growing research to tap. For example, one method which is said to be very effective in gauging culture is employee surveys that allow anonymity. Whatever the methods, the overall governance of any organization can only be strengthened if the board and its operational eyes and ears, that is the internal audit function, bears in mind the need to establish and foster the right culture in everything it does. I'm sure the expert speakers we have gathered today from Europe and Asia would be adding more depth and color so as to how your company can build a culture of trust. Now, let me talk a little bit about shareholder activism and its role. Before I end, I would encourage all shareholders to actively participate at company meetings responsibly. I also call on all companies to facilitate responsible shareholder activism, as it helps to improve accountability and transparency while putting pressure on companies to improve the quality of their engagement with investors. To facilitate this engagement, SIAS in Singapore has commenced the review of annual reports and issuing minimum of 3 questions on every company annual report on corporate governance, business strategy, and financial statement. The exercise is helping to focus discussions at shareholder meetings, raising the quality of meetings, and helping companies to provide better accountability to shareholders. Companies are encouraged by SIAS to address the questions at the AGM, and also publish the answers on SGX website as part of their disclosure. Thus far, about 1/3 of the companies have published their responses on the SGX net to the questions that we have questions, and we are now extending it to cover 500 listed companies in the next 12 months. In our view, thus far, companies need to communicate their strategy more effectively in order to keep shareholders on side, given that their individual goals may not always align. The International Bar Association publication in February 2015 highlighted that the California Public Employees Retirement System, that is CalPERS, was one of the first major institutional investors to embrace the shareholder activism, and the companies it invests in appears to have benefited. Wilshire Associates, the pension fund's primary consultant, claims that 5 years ago, the companies CalPERS engaged with were underperforming their index peers by about 36%, but that after 5 years of active engagement with the shareholders and investors, the same companies returned about 11% above the industry average. While this is encouraging, it is noteworthy in itself that CalPERS has chosen to engage actively with the companies it owns, perhaps a sign of the times. Similar results are also seen in Singapore. SIAS conducts research on the corporate governance and transparency practices of Singapore-listed companies annually, rating and rewarding them with awards. Based on research conducted by the Singapore Management University in 2015, over a period of 4 years, the winners of the SIAS Singapore Corporate Governance Award consistently outperformed the returns of the Singapore Benchmark Index, the STI. Therefore, companies should embrace these engagements and not treat shareholders as a nuisance. Nevertheless, companies should be well aware that lurking in the sidelines are also unscrupulous opportunistic short sellers looking to take advantage of such shortfalls in transparency and governance to create havoc. So please be vigilant. Once again, I wish you all an enjoyable conference, and we are indeed very pleased to be here with SEC and SET, and we thank our sponsors, Thai Beverage and KPMG and SET for making this possible. Thank you very much.